Hello friends out there, I hope I find you well today. My name is Shango. The last time that I posted my video, I spoke on how to trade Forex pairs, of which I did not get into details on how to trade Forex pairs. Today I am here to get a little bit deeper on how to trade Forex pairs. Like I said in my last video, Forex pairs is a situation whereby you have one currency being traded against another currency. That is an example of a Forex pair. So there are scenarios where you are supposed to place a buy or a sell. Today I'm going to explain a little bit deeper on how you on scenarios where you're supposed to place a buy or a sell in order for you to make a profit. So I'm going to make use of this pair, that is the USD being traded against the Great British Pound. I'm going to explain four situations there. I'm going to explain a situation whereby the USD, which I said in my last video, is the base currency, which the currency which is listed first on a pair is what we call a base currency. Then the currency that is listed secondly on a pair is called a quote currency. So I'm going to explain scenarios whereby we will find the base currency either gaining or losing in value, as well as the quote currency either gaining or losing in value. I'm going to explain the situations where you're supposed to place a buy or a sell. Let me kick off by explaining the first scenario there, which is A. We are saying that the USD, which is our base currency, is constant in value. It is at $1. Then our quote currency, which is the Great British Pound, is gaining in value or has gained in value. At first or initially, you were supposed to pump out 10 pounds for a single dollar. Then you are now pumping out 8 pounds for a single dollar, which means the Great British Pound has actually gained in value. On a graph of Forex trading of pairs, you are going to witness the graph going down from 10 pounds to 8 pounds. In such a situation whereby you expect, according to your analysis, if you expect that the second currency, which is the quote currency, is going to gain in value, you're supposed to place a sell. Okay, I think that one is very clear. Let me move on to the next situation. We are talking about a situation whereby the base currency, which is the US dollar, is also constant. It's at $1. Then when it loses value, when the quote currency, which is the GBP, loses value, it means that initially you were pumping out 8 pounds for a single dollar. Then you are now being required to pump out 10 pounds for the same single dollar, which means you are now pumping out more for the Great British Pound. This is a situation whereby we are saying the GBP has lost in value. In such a situation whereby the quote currency loses value, you're supposed to place a buy, because on the graph you're going to see the candlesticks moving up. Don't worry, I shall explain more what I mean by candlesticks if you are not yet aware of what I mean by candlesticks. I'm going to explain in my videos which are going to come. Moving on to the next scenario, which is the third situation. We are talking about the base currency, which is our USD, gaining in value from, let's say, $1 to 90 cents, which means that initially you were requested to pump out a single dollar, we are exchanging for 10 pounds. But as the US dollar gains in value, we are now required to pump out 90 cents, only 90 cents for 10 pounds. This situation simply shows us that the US dollar is actually gained in value. Under such situations, you are supposed to place a sell. That is, if you foresee that the US dollar, which is the base currency, is going to gain in value, you will place a sell, because on the candlesticks graph or for Forex pairs, you shall witness the graph going down. That means it's supposed to be a sell. You place a sell. Then moving on to the fourth, which is our final situation or scenario, is whereby you see the base currency, in this case, which is the USD, losing in value. You were initially supposed to pump out, or we were actually pumping out a single dollar for 10 pounds. Then you are now being required to pump out $1.20 for 10 pounds. Such a situation shows us that the US dollar is actually lost in value. If the base currency has lost in value, you will place a buy, because you're going to see the graph moving up, showing an increase, showing a loss in value. I think, ladies and gentlemen, this is what I wanted to share with you. Don't forget to like my channel, and then subscribe for you to be in a position to watch more videos pertaining to how to trade Forex. I want to believe that you have benefited from this video. Then I also advise you that it is very risky to trade leveraged assets. Very risky to trade Forex. So make sure that you acquire the necessary knowledge, strategies, skills before you venture into forex trading, so that you do not lose your money unnecessarily. See you on my next video. Then following this video, I have attached my links. I actually trade on FBS and Deriv broker, because these are the brokers with the more than 20 years of trading. They've got a massive experience in forex trading, and your money will be guaranteed to be safe. So I'm going to attach the links for you to join such brokers. That is, if you happen to open if you want to open a trading account, a real trading account, or a demo. And I also advise you to first of all open a demo account, whereby you put your knowledge into practice and gain confidence before you move on to open a real account. Goodbye. See you in my next video. Thank you.